Good day, fellow investors. How deep should one research a stock before making a decision whether to buy, sell, or say next? This was a great comment here by Eddie, how he owes me one comment. He has been looking at my channel for the year. Consider subscribing, but over time I've noticed the quality of your analysis got a bit less in depth. Give an example as this video where I discussed Monish Pabrai's portfolio. So superficially understated, which at least merits more intellectual consideration. I would understand the idea between Monish's if I would have dedicated more time. So he will unsubscribe due to these considerations. Okay, thank you, Eddie, for the fair and sincere comment. But I really wanted to discuss, okay, how deep do I need to go in research? And let's take immediately on Pabrai's portfolio and see, okay, where is the value here? It's Monish Pabrai, value investor, Warren Buffett, Charlie Munger. Everything here should be value, so it's my job to dig deep to find the value. Okay, risk, Edelweiss, Indian company, a larger stakeholder likely Pabrai, therefore there is a Pabrai risk there. Emerging markets, financial business. When emerging markets revert and crises happen here and there, 1998 Asia, things like that, everything freezes, and that is a risk I simply don't want to take. Plus, I can't invest in India, and especially these valuations, I would not do that. So it's a no for me. Turkey. I am from a frontier market. Turkey, frontier market. Turkey is just here close to me, been there. I know Turks, I've lived with them, grew up. For me to invest in Turkey, I would need a high single-digit yield plus the growth. TAV Airports looks like a great business, huge structural tailwinds, but it doesn't meet my requirements, which is 8% dividend yield plus the growth they are working on. That's it. Now, coal. I am long coal. When Pabrai discussed it a few months ago, I also bought something, but I bought it in a more diversified portfolio with copper, nickel, zinc, chromium, coal, alloys, things like that. This is just me looking at it differently, and then if I go back to the US coal producers that he have bought, okay, that's okay for me, but I have found globally even cheaper, so even better for me. I agree with Pabrai's thesis, but I already have exposure, I'm happy with that exposure, and I will manage that exposure over time. I have cheaper than US producers. That's it. Do I need to dig deeper to understand this and that? Plus the price is already triple, so that was a great call from Pabrai. I don't know how deep should I go. Mongolia. How deep do I have to go there? I have looked at this 8 years ago, 6 years ago, Turquoise Hill, Rio Tinto investing, and as it was clearer that they will start making money, the government said, ho ho ho, now we want more. That's doing business in Mongolia. I rest my case, I don't need to dig deeper. Now, on the great home builders, everything looks great, 10% buyback yields, they're flushing with cash, they're investing in property, green brick. Okay, I always look, I'm perhaps biased, 2009, perhaps things have changed, but I know that the US system is house of cards. If that changes, I would have to run out, but then 10% yield, I still have better elsewhere, so I'm not going to take those risks for that value. Next. Pabrai was correct on Valaris, the value there was clear, and we did a video 5 months ago. It just didn't feel like me, so he does that super cycle watching things. Sometimes he's right, sometimes he's wrong. This is my position, P ratio of 7, 20% return on equity. I can buy it at 0.8 of book value. The book value is fully in cash. There is 10 to 15% growth, margin of safety. I want it all. That's what I'm searching for. When I find things that might be like this, then I dig deeper. Pabrai has more than 10 positions. I have one in my personal portfolio. And here we come to the comment, if somebody doesn't agree with me, they say I'm a superficial researcher, you can throw my PhD. And that's the most common comment I get when somebody disagrees, is that I'm superficial. Well, I go as far as I need, and let me show you my pyramid of research. Let's take a pyramid, and then you can see here, these are the last videos. The quadrant, 10 stocks on Wagons, Adobe, Google, JD, Baba, PDD, one discussing the market, Visa, Udemy, Adecoagro, Sprout Farmers. So these are dozens of companies in 6 days. This goes to the base of my investment research pyramid. Plus there is so much you don't see that I even don't make a video. Then when something is interesting from here, I put it on my covered stocks on my research platform, where I want to learn more. There is about 25 of them properly, and then 50 in the shadow depending on the price. When something is interesting here, it can go into the diversified portfolio, 19 positions, learning. When something interesting goes to the model, 9 portfolio positions, and the best goes in my personal portfolio, 1 portfolio position. So that's how it works. This is my punch card. For now I have just one that I just started, but this is also what Pabrai discusses. This is how Warren Buffett invests, and you have to find one over a few decades. When something is close to here or here, then I go deep. Here, I go as deep as I need. For example, this is now part of my covered list. I have been following Wilmar International, the ADM of Asia, also owned 22% by ADM. And now the recent news is they have one guy in Indonesia that goes to jail. They have to pay $700 million in fines, booyah. And then the same happening similarly for their Chinese operations, more people in jail. And then I'm thinking, yes, research. Is that something that I want to research more? The time will give me the answer. I have to adjust to the new information. I have to sense the possible unknowns. Everybody knows the knowns. I have to find value in the unknowns and find things that even if the unknowns happen, I do okay. That's my job. Because I don't help you much with what everybody knows. And everybody knows demand for AI is insatiable, as Larry Fink here said. But it's free, Larry. This is my added value. So the debt, yes, it will keep on going on my research platform, and depending on what is interesting also on YouTube, but I still have to find, okay, better. Whatever, as I peel off the layers, I don't find the risks. Exactly what Monish Pabrai says. Using superficial analysis to quickly eliminate an investment idea and move on to look at other investment opportunities is Monish Pabrai's superpower. As Warren Buffett says, I'm glad to see you cloning this practice. Again, if somebody disagrees, for example here, somebody on LinkedIn that's a Bitcoin person, come on Sven, you can do better than this and actually read the book on Bitcoin. This is such a letdown for a professional. Well, I've discussed this with Scaramucci. He wrote a book of Bitcoin. I read his book. I enjoy reading, researching, but sometimes I already know how deep is enough. Bitcoin can be great, can be rat poison, as Buffett said. I don't know. Enough for me. I'm not looking for potentials, 2x's, managing risks. I'm looking for those punch cards. This is you buy once, you keep it in the portfolio until it's crazy overvalued, or you just let it compound. That's what I'm looking. That's why you see a lot of nexts. Or, as we discussed in my recent quadrant video, we see it as emptiness on the quadrant. Check it out, check my research platform. I'll see you in the next video. Might be superficial, might be deep.